Let's do it. What's going on, players? Let's take a look and see if we got any earnings plays too. Hey, Matt, what's up, baby? What's going on in the hood? Yeah, it's fucking raining over here. So you guys will see me maybe all day. Donnie Hensley, the man, the myth, the legend. A lover, a scholar, and a philosopher, all wrapped in one New Jersey big hairy body. That's the way to really go. That's how you get all the chicks. Now, let's get to work here, guys. Hey, we got a small gap up in the market after a little bit of a fade yesterday back into the lows. I mean, we are like kind of at that sweet spot where we're a little bit overbought, but we're not getting that inkling of that big fade. And, you know, I've been thinking about fade for days, but I haven't taken any shorts all week. So I just haven't seen the overall look of it. I mean, we did run back into resistance yesterday and fade off, but I was already gone for the day by the time that happened. So now we've got a little bit of a range. So today we got a 0.66 gap up. We've got yesterday's lows and then, you know, this range at the top here. So this is just like kind of a 3-day box that we're trading in. And we'll have to see which way this breaks. Like if the fade's going to be on, ideally, right, you kind of go green to red and take out these lows. Till that happens, we're just in a hot box. And for any of you guys that have been Dutch ovened, the hot box it's a terrible place to be unless it's your own hot box, right? Like then it's not so bad. But if you're just getting yourself hot box by right your buddy or your girlfriend, then it's not as fun. We need to see which way this breaks. In the meantime, we have seen a big change in character in the market. And what I mean by change in character in the market is that you're starting to see like, you know, patterns that would have been shorts, you know, say like 2-3 weeks ago, have become essentially just buying opportunities. So, you know, you're seeing this kind of action like in Chinese stocks, for example, like, you know, like these are all gapping down 3-4% yesterday. By the way, yesterday was the day you make your month. Always after you only get a handful of these a day, right? Or a handful of these a month. You got to make your nuts when you see these things. So you had like this kind of action. So this is happening quite a bit. Like, you know, like UPST a couple days ago had a downgrade and it gaps down 7% and it completely gets bought up. So beyond like what you're seeing in the actual individual indexes, right? The eye test of the price action is telling us like, hey, like, you know what? Like some things are right changing around. Like you're seeing this all the time, right? Like even on a firm, right? It gaps down like 3-4 days in a row and it just starts to ramp up. So a healthy market is like when people see, right, like some type of weakness and they think like, oh, fuck, I better buy it because something's on sale. Where in an unhealthy market, right, when you see the weakness, you're like, fuck, there must be somebody unloading on it. And you end up shorting everything. And, you know, that's the way these things go. So just got to be mindful of this. You know, we're in a little bit of a box. We are slightly overbought, but frankly, yesterday's down day kind of took off that overbought condition, at least on a short-term basis. You know, my gut feeling, guys, is that the worst of the bear market is probably over for now, but we're going to probably enter like a big, long, incestuous range where, you know, you'll get some big fucking rallies and then just big dumps back down. And, you know, we could play in that box for like a long time. And if you really think about like, we've had years where that kind of stuff has happened. If you guys remember, like, you know, 2015, 2016, and even parts of 2018, like we were in these kind of ranges where, you know, you were just stuck for like a period of time. If anybody remembers 2015, minus like this one day, there was like some news of China, the market just like dumped off and then completely reversed. We were really in like a range for a huge period of time. And really the market was just held up by like a handful of stocks. And then, you know, we ended up going on a big ramp. But like we've had these kind of spots here, like this in 2012, where you really just can sit in a range for a long period of time. I have a feeling like we're settling into probably what's going to be a larger, but it'll be a wilder range because, you know, we still got all sorts of news happening and rising interest rates and stuff. So I think we're going to get these kind of big rallies and big fades for some time. But like, is the market going to like break out here and go back on a rampage. I highly would doubt that. That would be a very, very low probability play. But a range just feels like kind of we're already seeing that, right? Like, the market dumps off, you get 4 or 5 day range. Market dumps off, you get 4 or 5 days of beautiful bliss, and market dumps off, you get 4 or 5 days of beautiful bliss. And we may be just kind of entering into that kind of phase of the market where we do that. Let's take a look at the earnings plays. One of the things that probably is good for most traders, is most traders are degenerates, and this is all they trade, is, like there's a comeback in some of these small caps. The pumpers have come out in full force, which is good. Like, you need these kind of things anyways, and pumpers got to make money too. And you got all these kind of every day there's some kind of action on some of these. So this is like, if you're going to play this kind of stuff, these are the place to do it, and probably the right time to do it, because the market has kind of healed itself for a momentary basis. I'm obviously a man of honor, and so this is not going to be my thing. If I trade that, it'd have to be like picture perfect, but you can start to see here, like all these things are starting to push up. Even there's things like, even some of these ones that are like not necessarily small cap ones, they're like a little bit higher price. They're still small cap and like market cap. You're seeing this kind of action here. And by the way, like if you are going to trade like low float stocks that are like a little bit cheaper, man, if you can find the ones that are like this, like $10, $15, they like rip like a lot quicker than you'll see on any other type of name. So, be mindful of those. Like when you see these kind of gappers, those are usually the ones, because it doesn't take that much volume to get them going, because they're a little bit higher price. They'll usually have a spread on it. So like those are the ones, like it'll just really take some joker in a chat room with 1,000 people, 2,000 people. And I mean, you could probably double or triple that thing. So just keep an eye out on those setups. Like they do tend to explode a little bit better than the $3, $4 ones. Nicholas got a PR out. Oh, expanding English shares jumping after hours trading. This one's like kind of stuck under the 200-day moving average. It does go with the theme though. Like if it could break over, and I don't know, right? Like gapping up into like a major resistance is always like a tricky one. Usually those, like if they go later in the day. I'd add that to the list, but with the caveat, like it'd probably have to take some time and then get over this 200-day moving average. And obviously this company is like a big gelatinous piece of excrement, but what can you do? Hepatitis. So these are like electronic services and trading, pass, FSRD, fast radius. You see, these are like, when this is the sign of a healthy market. Like when people are like waking up early to do their pumping, that means like they're like ready to go, right? Like in a bear market, people that trade these kind of stocks are always depressed. So they sleep in late, they're haggard. But like in a hot market, they'll wake up early to get these things going when there's no liquidity. Not too bad. Junk. This BBIG is like another one. Like you see, this thing's been kind of gapping up every day. Yeah, pass for now. Let me change the settings on this thing so we can get rid of all this junk. Makes it a lot easier. Here we go. Uber. Market chat Uber, reach the deal to list New York City taxis on the app. You know what? Get out of here. That might actually be something worth playing here. You've got a rounding chart on this. It's a little bit of a thicker one than I personally like, but who are we to judge, right? It is Thursday. I'd roll with this. You know what? If this thing sets up intraday, like we could probably play that bad boy. Jump. All right, cool. So let's just get into kind of the regular watch list and let's roll with this thing. On the long side, I think the faves, we still want to be playing these China names like SC. Well, this is not technically a China name, but it's running with them. We want to be playing these ones. This is what I want to really be seeing. Like when you see like this kind of weakness, they get bought up. Like I would keep rolling on these. Like PDD is another one. Like any type of weakness. Like when you see this, like these are called MP. When you see MPCs, that's what you want. Like if you could trade stocks, like when they break range and you just get like these mega penis candles. I mean, it's like a $4 candle. Like you're rolling 2,000-3,000 shares of this. You just had yourself a nice day. When you see like these kind of consolidations and they rip, that's a sign that there's at least some good action happening. I keep all these Chinese stocks on the watch list. They are like kind of running into a little bit of resistance, but like I would be watching on any kind of weakness. Like, so if they start to really kind of marinate to the downside, watch and see, does it get a little rounding action? Does it start to get picked up? What I mean by rounding action is, when you start to see the weakness, like something like this, like a lot of times you may sit there and think like, oh, that's like a bear flag or something like that. That's not a bear flag. Like a bear flag is not a bear flag unless it's a bear flag. That's a sucker's game to try to short those things on that kind of weakness. We want to see this kind of action. Like, so you get the weakness down here, it's rolling red on the day. And, sometimes people will try to short that, but there's just too much strength on them. So I keep all these, and on the little ones, I think the IQ really has been trading the best one. Man, I had a fucking monster load of this thing in the low fours yesterday. This thing is actually, this trades pretty well, and I wouldn't consider this like a small cap because it's still like $1 billion company for the most part, but it's got that good, solid, God-fearing Christian range that you need. I think TME is another one that's probably got a little bit of juice on it. And then this Huya also. So both those little guys have the range on them. And then on the other side, Huya, TME, IQ are like your more speculative ones. Now let's roll into just like kind of some daily traders for us. I think this Oxy's had a little bit of a rest and the gap up today. We're coming back into support. Like, we want to really be probably hitting this thing on more weakness and trying to chase it up on strength. But like, this has still got the good trend on it. Like, we want to be playing on this one. I think that, X and CLF are still daily traders. Like, they're just grinding higher right now. Like, you could still be hitting these on like dips. Like, they're overbought in some manners, but when they just trend up, like, and they're just grinding higher, they haven't gone parabolic enough to really short unless you have like some piece of news out that's going to take these down. So I'd like keep all these like ag stocks, steel stocks. I keep one or two oils. You roll with those. UAVS is, I believe, like a drone company. Mary, it looks okay. Like you've got like kind of a base breakout over here. Like I wouldn't be opposed to something like that. It's not my particular flavor. As we're, Indians wearing the, different kind of foods than white people. You guys like the McDonald's. We like the curry chickens, the butter chickens, the chicken macaronis. That's what we like. But what you like is a little bit different. But that's okay. Like, this is okay. Like, if I was white, I'd be down into this. But I ain't. No chicken pikas only for us. Now, on the other side, like if we got a couple more. What are you guys watching? Yes, XPEV is good. XPEV, put an alert at the 30. You put an alert at the 30, like you're in a good spot over there. This is a little bit of a grinder, but look, you can still rip like 1 or 2, 3 points on a grinder. They just take a little bit of time, right? I sometimes stay away from these just because I don't have the patience. Like, I need to play things that have NPCs. and Mary, it does look good. Like, I just, I'm not a swing trader in general anyways, but I don't have anything opposed to it. If that pattern was on a different stock, I would totally be all about it. Like that pattern, by the way, is working. Like, if you see these kind of cheaper stocks that have the base, like I was looking at this DM the other day, like they're following through. So I would roll with those things today. One last speculative one, this SoFi's got like a little bit of a hanging chad. If it rips over the 10 spot, I think you probably take this thing back into what this 50-day moving average, which it's been like rejecting forever. Now, granted, I've been staring at this thing forever, wondering if it's ever going to go, and it never does. But, those are kind of different ways to think about it. BKKT had an inside day yesterday. Guys, when you have like a stock that has like a big run, then you get an inside day, like a very, very narrow range day. When it takes out that first day's range, it can be very powerful. I would keep an eye on this one. It's obviously a little bit more speculative, and it trades a little bit thin sometimes. But like that one's got some juice. And if we need some shorts, all right, if the market gets dusted here, you've got some levels here on MU, give or take like 76, 75, it doesn't really matter. Levels they're like more zones of love than, exact spots these days. But that one's got like a specific area of marination on it. Qualcomm's got, right, like a kind of specific, like see how it's like into the MAs and it's like kind of slowly rounding down. So like if they kerplunk there, then you'll have yourself kind of an easy short. I think the MU has like maybe a little bit better location. MPC just means Mr. Jim, a mega penis candle in layman's terms. Tap looks okay. This one lacks a lot of liquidity and it's like a little bit messy. If you see like how it's like a little bit of a grinder. Like this is probably something like you may invest in or something. But like for a day trader, it's not as good. Like you can see here how it's got a $1 ATR. So its average true range is just $1. So like when you're day trading, if you're trading something that's, its average true range is $1, like you have a lot of trouble trading it. You know what? We could do TTD too. Like you've got a level here on TTD. Like if it breaks under, like you could take this thing down for a short. We'll have to see. Like, I'm not that keen on just loading the boat on shorts. They'll come when they come, but I think we do got to be kind of prepared for them for show. I'd stay away from the meme stocks for now. They look like they all need a little bit of a rest. Like you see, like these things when they double like that, like you can't really play them anymore. Like this thing's almost doubled. Like you got to let it chill. Good. So let's go back into these buckets. We've got some China names. We've got a handful of energy names. We've got a couple stocks, some tech stocks for shorts in your MUs, your Qualcomms. And then, of course, we have like some nice solid inside days on some names like BKKT. I would even consider this KC a series of inside days, even though it kind of peeked its head a couple times. I would consider this an inside day too, a series of them. And then you've got a couple PR plays here in Nikola, Uber, that should keep us fairly busy for today. The easy bounce is over in the market right now. So today's going to be very read and react. Read and react is a little bit tough because like we don't have a surefire thing. Like there are some days you come in the market and you're like, okay, the market is along today and boom, we're hitting these tech stocks and everything is hot. And usually that's like the first, second, or third day of a run in the indexes. When you're getting into like day 5, 6, 7, 8, things become a little bit more murky because like you're still too strong to short, but you're too extended to long aggressively, if that makes any sense. And so we're in that kind of like just weird sweet spot where we got to be a little bit more careful. But I mean, yesterday was, I wasn't expecting much and it turned out to be probably the best trading day in the last few weeks. So what can you say? Sometimes they just come out of nowhere, right? So that's the list. I'm sticking to it. 10 years ago, hot damn. Miss Betsy, what's up? Amazon, like you're stuck under that 200-day moving average. All right, that's the list. I'm sticking to it. Let's do this, guys. As always.